Is hiring a banker too expensive? Now, the joke goes in our business, asking a banker to do a deal is like asking a bartender if you need a drink, like asking a barber if you need a haircut, and there's lots of other jokes as well. But in this video, we want to walk through 5 reasons, 5 considerations as to why, whether you hire us or hire anybody else, you should always hire a banker, and it's well worth the expense when looking to sell your business or secure capital. I'm Arthur Petropoulos, managing partner here at Hillview Partners. We're a middle market, lower middle market M&A capital advisory firm, advising companies typically generating $1 million to $10 million in pre-tax earnings or EBITDA to sell their companies or to secure capital. And so, when you are contemplating the sale of your business, when you are contemplating securing capital, there's always the option to do it yourself versus hiring a banker, M&A advisor, broker, someone to represent you in that process. And look, general rule of thumb we say is if you wouldn't sell your house by yourself, you certainly don't want to sell your business by yourself. But that being said, there's lots of different opinions, and so we wanted to walk through in this video 5 things to really keep in mind, 5 things to truly consider as to whether hiring a banker and the fees incorporated with it are too expensive or well worth the price. So first of these is the narrative. Now, if you go out to the market to try to sell your business yourself, there's going to be one thing people focus on. They're going to say, what are the numbers? What are the fundamentals? Revenue, COGS, OPEX, profit, and what does that look like? And we're going to slap some multiple on that, toggle it up, slightly beat it down for one reason or another, and hey, that's the value. It's not going to be adjusted EBITDA. It's not going to be a negotiation in that regard. It's purely going to be what do the taxes show, what do the income statements show, and that's largely how that calculus will define your business, despite the decades that you put into it on a 5-minute back-of-the-envelope calculation. Therefore, what value does a banker bring to that? Well, first off, when it comes to the fundamentals, it's going to be a normalized or adjusted EBITDA, looking at truly the cash flow generating power of the business in the hands of a future owner, scraping out all anomalous things, non-recurring, right-sizing certain expenses, eliminating other expenses, but generally speaking, that EBITDA figure will be higher. So even if you sell the company for that 6 to 8 times multiple, what that's being applied to is going to be considerably higher. And that's purely on the fundamental side of the business. Now, the 2 other elements of the narrative that are going to be emphasized by a banker, particularly if there's a good banker, are access and capabilities. Access being, who do you have access to from a client base? What industries, geographies, demographics? What are your specializations? How can you be the missing puzzle piece to someone else's map that they have covered? Where are they lacking? That's one element. And the second is going to be capabilities. Now, let's assume you generating $1 to $10 million in profit. You're not competing on the lowest price. You're not a commoditized business. So there's something special, proprietary, unique about your business. And that has to be emphasized because that can be, again, the missing arrow in the quiver for a large organization, for a private equity firm, family office, whatever it may be. But the point being is the narrative encapsulating not just the fundamentals, but the right-sized fundamentals, in addition to the access to capabilities, that has a lot of value to it. Number 2 is going to be the audience. What's the most successful hot dog stand? I always say to my analyst over here, it's the one in front of the starving crowd, right? Iterations. If you talk to one person about a deal, you will get a better result if you talk to 100 people about the deal, even if that first person is the person you ultimately go with, because you are iterating the exercise. You're extracting from the market what the offers are across all variables, what the appetite is, what the appeal is, and you're getting a far more granular feel of the market and how they value the business. Now, you could say, well, I could just go on the Google or the ChatGPT and find 50 companies that do this thing, but A, they may not be the right people to reach out to. There's a lot more nuance in these things of who has portfolio companies that are interested in the space, who has expertise interested in the space, who buys things for a lot of money, who are the good people to deal with, who are the suspects, who are the prospects, right? Everything in between that. But in addition to that, how do you actually get on the radar? We had a small company come to us one time, a software business, that said, hey, we'd be a great fit for Microsoft, but we're going to do it ourselves. I said, great, pick up the phone, give Microsoft a call and see what they think. That'll be the next prong here. But even relative to access, if you have the right narrative, how do you get it in front of the right people? Who gets deals in front of the right people all the time, right? That's the banker community. So if you find the right banker for a situation, they will have access to the right party. So just like access is important to your business, are you reaching the end markets that you want to be? It's the same for the banker community in the sense of, can they get access to the right people at the right companies to give them that narrative? So number 3 is the process. So we say right narrative, right audience, in the right manner, communicated in the proper way. And so if you just take a bunch of stuff and throw it at somebody, particularly if you're that $1 to $10 million EBITDA company, you're trying to leapfrog up the institutional capital food chain and get in front of the largest person, i.e. the person that can pay the most for the business, it has to not only be packaged in a certain way, but it also has to be sequenced in a certain way. All the parties need to receive certain information at certain junctures. They have to be pulled through the funnel and on the conveyor belt at the right cadence, not too fast, not too slow. Things can't trickle. We don't want tire kickers. But things also can't be ramrodded through because people are going to say, hey, look, we're a multi-billion-dollar company. This is not a giant deal. It could be an important one. And so there's a delicate dance that goes into that. And we've talked about it in other videos as well relative to the overall process and how we facilitate that. And so there are lots of steps within it. However, it's not just hey, could this be interesting? The answer at best you'll get is maybe. And then you say, well, what's the next step? How do we get them to talk more? How do we get them to dialogue more? How do we dig in more and actually extract, right, the offer from the potential acquirer? The process, unlike selling other things, is an extraction process. It takes proactive effort to facilitate that exercise, to bring someone to the conclusion that, hey, this could be the missing puzzle piece for our company, and this is why we value it, and this is the offer we put forth. Number 4, which is a key element to all of this, of course, are the results. And so if someone says, hey, I'm going to sell my business for $50 million, well, if $1 million is at close and the other $49 million come if you can bench press a car or jump over a skyscraper, it's not really a $50 million offer. And so we break down offers, if you will, into 4 key components. First being the value, the second being the structure. What's at closing, what's over time, what are the contingencies, are there any risks to getting all of it? Number 3 is going to be what's the transition time for ownership. If someone says, I'll buy your company for $20 million, but you have to stay here for 15 years versus you can stay here for a tapering year, 3 months doing the same thing, 3 months coming to meetings, 3 months taking phone calls, 3 months not vanishing to Monaco, right? Those are hugely different deals. And number 4, stakeholder considerations. What happens to the employees? Is there community considerations? Is charities? Whatever is involved with the business, how do you retain? How do you make sure that's going to be a part of the business? Now, you can't control it forever, but you do have some element of control, at least for the immediate to near, even midterm, future, post-transaction. And so, optimizing those results is a product of an optimal process, which is a product of an optimal audience, which, as you guessed it, is a product of an optimal narrative. And so, number 5 is the focus, the relentlessness, and the responsiveness. Now, you are running a business. If you try to sell your company or find capital while you are running your business, no matter how smart you are, or how smart we pretend to be, the main thing is really the main thing. It's the thing you have subject matter expertise with. It's what you know best. It's what you know how to do. And if you wade into other waters, you're just not going to be the subject matter expert no matter how smart you are. There's certain nuances to this business. We don't say this to be rude to anybody. If I went into any of our clients' businesses and tried to say, how do we sell building products? How do we provide pharmaceutical consulting services? How do we develop software? We're not going to know that as well either. And so, although people have a pretty good idea sometimes as to how the deal process may work, we are in this swimming pool all day. We know all the nuances. We know all of the tide changes, sea changes, things that are going well, things that are not going so well, what will work. And by virtue of that, we can get the best results. The relentlessness is similar. If you're going to call someone once about a deal, well, if you call them 20 times, you're probably going to get more responsiveness. And maybe that's going to be get lost. If you get the answer of get lost quicker, it's going to expedite or accelerate the iterations of the deal to ultimately get to where you want to be. And the responsiveness as well. You have an attorney to deal with the legal stuff. You have an accountant to deal with your financial and tax implications, but you need a banker to deal with the deal stuff. This is, again, the swimming pool we swim in. And if you text someone at midnight, a good banker, you want a response. What's going on with this? Where are we with this? And if it's a real good banker, you don't even have to ask them because they're already giving you the updates. When we say relentlessness, it goes to all parts of our business. We are maniacally focused on this. If there's any indication of it, we're filming YouTube videos at 10 o'clock at night on a Tuesday. But jokes aside, focus, relentlessness, responsiveness, and just duplication of bandwidth is going to generate a hugely different outcome. And so funneling this all down, here's the real brass tacks of it. If you were to sell a house by yourself, maybe the price would change by, call it 10% in either direction, 15, 20%. It's a meaningful difference. However, it's still somewhat confined by certain bounds. When it comes to businesses, I've seen businesses get an offer for $3 million that sell for $15 million. We've seen businesses that get an offer for $10 million that sell for $30 million. There's a huge variation. Oftentimes, it can be multiples depending on who it is, right? And there's no worse feeling in the world when you sell your business for $5 million that someone else then sells 2 years later for $25 million without even making that many differences. And so, if the fee, as it tends to be in the lower middle market, is 5% of a deal, depending on the size. If it's bigger, it can be certain types of step functions and whatnot, but let's say 5% for round numbers. If the ultimate conclusion is an offer, a deal that could be 50% higher, as well as solving for all these things, as well as the peace of mind that it's going to happen, the probability is going to be high that it's going to happen, the speed to it happening is going to be good, it's going to be a far less painful process, and the result is going to be far superior and far exceed the cost of the banker. Our conclusion, again, whether you use us, whether you use anybody else, is that hiring a banker is not too expensive. Now, if you hire a bad banker, any other service that you hire, it's not going to be worth a nickel, right? Pay peanuts, get monkeys. But if you find the right counterparty, which we are proud to say we have been and continue to be for all of our clients, it will far exceed the cost of the exercise. So that's the thought for today. I was going to say getting off to a good start, but I think it's going to be Wednesday or Thursday by the time this one gets out. Hope the week is going well for everybody. Keep pushing forward. God bless. See you next time.